Hey everybody, Mike Drutar here, Principal Broker, NextHome Paradise Realty, and I'm giving you a market update for the first time in a very long time because frankly, I don't want to do these unless I'm seeing something in particular that really catches my attention and that I think could be indicative of something that is coming on down the road. I always want to look at the data. It's a thing of the past, but I want to use it as much as I can to see what's happening in the future. And it's time to talk about it because there was something I'd been noticing happening, and I decided to go and do a deep dive. And what I saw was kind of surprising. It was at a greater level than I thought. What I'm talking about right now is the purchasing that's been happening so far this year compared to the end of last year for the ultra high net worth people. Now, I understand that most of the people watching this aren't in that category, and the reason I'm bringing this to you isn't for those people specifically, but to show what is happening there and how it might impact what's happening in your market. So no matter where you are in the country, no matter what market you're looking at, I think there's some important signals here, and I'm going to go back to 2021 to try and make this point. So first of all, I'm going to be looking at some data. This is from our MLS, and I'm specifically going to look at sales that happened and on the last 3 months of 2024. So October, November, and December of 2024. And we see that there were, of properties listed over $10 million, there were 2 sales. And I think that makes sense. And we can go look at another piece of data where we look at the top 10 percentile. We saw that the market was really slowing down at that point across all categories. And I think there were a lot of pre-election and post-election jitters where people aren't really sure what the future looks like. And it's the uncertainty that really makes people stop. It's fight or flight or freeze. And when people are uncertain as to what's to come, they typically freeze, in my experience. I think we saw a lot of people freezing and we didn't see much happening. So 2 sales over $10 million over the last 3 months of 2024. When we move that forward and look at what's happening here in the market right now, we are about 80 days into this year, so about the same amount of time, actually a couple days less. And in the first 80 days of this year, we've had 11 closings over $10 million. So remember, for the first 3 months of this year, 11 closings over $10 million. For the final 3 months of last year, only 2. That's a significant number. Pretty funny, I record that video on a Thursday night, planning to release it to you guys on Saturday. Lo and behold, on Friday, we have reported yet another big sale, $20.6 million. So now for the first, 2 months and 21 days of this year, we have a dozen sales over $10 million compared to only 2 in the last 3 months of last year. So just more data that keeps showing that there is some big money coming into this market right now. And there's a lot of money, a lot of cash coming into this market. Every one of those sales, of course, is cash. These people aren't buying anything financed. So we're seeing a lot of money come into the market. Let's go back in time and check out what happened starting in 2021. Coming up into the end of 2020 and the beginning of 2021, this orange line I have here is the top 10 percentile sale price. So we did this on a 90-day or 3-month rolling average. I wanted to have a large sample size. So over 3 months, you might have 150 or 250 homes back then that had sold in West Hawaii between North Kona and South Kohala. And I just took the number 10 percentile sale and put that in here to come up with a number. And I define this as just being the luxury market, the top 10%. And you'll see that at the end of 2020, we were still pretty much in the upper 1.8, 1.9 million range. And then you see this spike happen right here where it suddenly goes all the way up and skyrockets to $4.677 million as that top percentile, top 10% sale. And then it settles back down, but it sets a new plateau and a new base when it does. So previously you're looking at $1.6, $1.8 million as your top 10%. you have this big spike that goes up, and it was a really big spike at that time, as big as we had seen. And you set a new plateau where it's between $2.3 and $2.7 million for the most part for a couple of years there, all the way until December of 2023. Then we see another big spike of cash coming into this market, a handful of high-end sales that moves that top percentile up all the way as high as $6.625 million, plateauing for a few months there with some lagging data. You're going to see that happen with a sample size that stretches out this long of the upper 4 million range, and then it plummeted all the way back down. And we look at when it plummeted and we check out the timing here, and I think it's really easy to kind of figure out what's happening. Around August and September of 2024, it looks like people stopped putting money into this market. It had plateaued around 4.75 to 4.95. It plummets all the way down to where the top 10 percentile sale is as low as $2.4 million. That's all the way in, looks like October of 2024. Obviously, this is people looking at the election and the uncertainty of the election. Not to get political here, but if you remember at the beginning of the year, it seemed like things were going to stay with the incumbency. The debate started happening. People got a little bit uneasy with the incumbent candidate. There was a big change. People didn't know that new candidate. No one really knew what was going to happen, and we really saw it with a real big drop in spending on all markets out here. Slightly after the election, we saw things rebound up. I kind of expected we'd see that. But then what we have going on right now, the last 3 months, and this last number here, 5.142 million, that's based on the last 90 days as of March 20th. That number may change at the end of the month when I finalize this. We see that we are spiking back up at $5.142 million right now. At the end of February, it had jumped up to 4.3. We had rebounded at the beginning of the year. And there's a couple of things going on here right now. This isn't necessarily indicative of a lot of confidence in the economy. I think what's happening here right now and what we're seeing with a lot of these closings are two potential factors. Number one, possible worries about inflation coming on down the road. I think that was the main driver the first time that we saw this bubble or this big jump happen in, looks like starting around May, June of 2021. I think at that point, people in the know realize inflation is coming. The best hedge against inflation is real estate, put it in a tangible asset, and people have done that. I think we're seeing a little bit of that right now. But what I'm also seeing is I think there's some hedging, not necessarily for the inflation hedge, but I think there's some hedging going on because people are absolutely getting hammered in the stock market right now. In the last few months, the stock market is down 10%. That's significant. And I think what you're seeing is some people taking money out of the stock market because they're not sure how much further it can go down, and they're putting it in tangible assets. You'll also notice that gold has had, I believe, an all-time high last week. So people are not feeling so secure about the future, certainly not secure about the stock market. So they're buying tangible things. And people with a lot of money are buying these real estate properties, these trophy properties that we see out here. I'm mentioning this because last time we saw a big influx of cash coming into this market, it did foretell an increase in values across the broader market. So we're taking a look here at this $4.677 million top 10 percentile sale from around June, July of 2021. We're now going to go look at the broader market and just look at the straight median price. And you can see in June, July of 2021, we had been, while we were going up, we were already seeing the run-up that was happening after the lockdowns and everything around that. Prices were around $780,000, $850,000. You had a couple months where it was a little bit higher, where it peaked over $900,000. You can really see a bit of a change happening after June, July 2021. Before that, we had never been over $1 million, and then just a couple months later, we went to $1 million. We pretty much stayed there and slowly elevated ever since that. all the way to today, where we're seeing right now at this moment, the median price for West Hawaii so far for the month of March, which isn't done yet, is an all-time high at $1.41 million. I think you see this number come up, and if we see people investing large sums of cash into the highest ends of this market right now, we may see more on the way for the broader market. Now, I want to be really clear. I am not calling or predicting that. I'm just saying that we are seeing a lot of money come into the ultra high net worth market. And in the past, when we've seen a lot of money come into the ultra high net worth market, it has foretold a broader growth in the market in terms of people investing into real estate. And that makes a lot of sense. Even if you're not a super wealthy individual, but you have a lot of money in the stock market, somewhere in seven figures, you're doing quite well for yourself, you may consider taking some of that money out and hedging it with a tangible asset, and real estate is a pretty good one. And hey, having a place to go in Hawaii isn't all that bad either. So I'm going to be very interested to see what happens in the next few months. I expect there's going to be more headwinds in terms of the stock market, and as that continues and people see their numbers coming down, it stands to reason that you might see some portion of those people put their money in real estate. Now, whether that's Hawaii or in your market, if you're on the mainland or anywhere else, I think it's really something to pay attention to. Be really aware of this thing. The sold data, what the prices are doing on closings right now, is indicative of what's already happened. A property that closes in March is a contract that was written in January or February. So what you're seeing when you see sold data isn't actually what's happening today, it's what's happened in the past. So if you see things ramping up with closed data, understand that the train has already left the station and it is moving in that direction. So it's something to really keep an eye on. There's a lot of nuance in this. If this is something that's really important to you, reach out to me directly. I have my contact information down in the description below, and we can set up a consult, have a meeting, and discuss what your goals may be. If they include real estate anywhere here in the state of Hawaii, we can take care of you no matter what island you're looking at. I hope you found this information helpful. If so, click like and absolutely make sure you hit that subscribe button. I look forward to bringing you some more information. We'll see you again real soon.